Good morning, everyone. Today is March 11th, 2024, and it's Monday. It's currently 8:53 a.m., and I'm here to analyze the morning market trends with you all. Just a reminder, my personal opinions don't represent the sole or correct perspective of the market, nor should they be your only basis for trading decisions. Our room here is a platform for theoretical learning and practical trading discussions, not a room for empty chatter. Looking at the overall market trends in the past few days, it seems to be mostly oscillating. The oilseed sector has performed well recently, with both soybean meal contracts showing promising movements. When it comes to trading, if there's no clear opportunity, it's better to wait. There will always be opportunities in the market. For contracts trading above the 8,000-point mark, it's essential to pay attention to previous trading zones and trend lines. Avoid going short while the price remains above the 60-day moving average, and focus more on long positions. Specifically, keep an eye on soybean oil and rubber contracts trading above their respective 60-day moving averages. I apologize for the interruption. I had to take a call. In summary, remain cautious and patient in your trading approach. There's always a chance for profitable trades, but it's crucial to wait for the right opportunities and avoid unnecessary risks. Now let's continue analyzing the market trends for contracts like cotton 2409 and sugar 2405, paying close attention to their behavior relative to the 60-day moving average. PVC. We had previously taken long positions, but they were closed out when there were no further opportunities. Currently, we should focus on the impact of the 60-day moving average, as well as the crossing of the 20-day and 40-day moving averages. Let's keep an eye on these levels for now. Soybean meal. The market opened higher, as did rapeseed meal. Oils like soybean oil opened relatively high, and rapeseed oil also opened well. Palm oil is showing even more strength among these oils. However, with palm oil reaching this level, we must pay attention to the significant resistance at 8,000 points. If there are no long positions established at the bottom, it's not advisable to chase long positions at relatively high levels. There's a high probability that the contract will fall back to 8,000 points before moving higher again. PVC. I'm still seeking any opportunities to go long on this contract, but it's not feasible at the moment. However, I'll continue to look for long opportunities. Sugar. Sugar, along with other oils, has shown relative strength in the past few days. As I mentioned earlier, for contracts like PVC, if there are no established bottom positions, it's not ideal to chase them at unknown bottom levels. This might not be the best time to chase, even though it's in a bullish trend. PVC. The decline in PVC was quite rapid. We need to watch out for the 5,800-point level, or even 5,750 points. This is how the market moves. Sometimes it comes and goes without us realizing. So when you haven't entered a position and you look back, you might find that some contracts have moved far away from your desired entry price. Live hogs. This contract is showing strength above the 60-day moving average. The pattern of live hogs is similar to that of PVC. Although the overall trend is similar, there are differences in how they behave after breaking above the 60-day moving average. Live hogs show strength, while PVC is weaker after breaking above the 60-day moving average. However, both contracts can be approached with a long bias based on the breakout above the 60-day moving average. Soybean oil. Soybean oil is also showing strength above the 60-day moving average, similar to rapeseed oil and palm oil. But I'll reiterate the importance of the significant psychological level for palm oil, which is at 8,000 points.